CPI data just came out, and well, this is very weird. We're looking at something that we haven't seen before, and the inflation data isn't giving us the answers. Is Jerome Powell right for keeping interest rates high? Or are we going to see a big 50 basis point interest rate cut here in the next 30 to 40 days? We're going to dive into all of that. But first, let's dive into the overall inflation rate and what we saw here today. So, July CPI inflation was unchained at 2.7%, below the expectations of 2.8. So they thought, hey, you know what, it's going to rise. But CPI, or core CPI, excuse me, rise to 3.1%, above the expectations of 3.0. And core CPI inflation is now above that 3.0% for the first time since February of last year. So let's dive into the numbers a little bit, because I think this is very interesting, right? What we always see, the utility piped gas service, look up, 13.8%. Massive, massive increase. Food, 2.9%. Food away from home, 3.9%. Energy is down, and energy continues to go down. I mean, gas prices were absolutely massive last year, so that is the only thing that we really see decrease. I mean, apparel maybe, but I mean, if you look at everything across the board, we're still significantly above that 3.0 range and that 2.7% range. But, you know, Anthony Pompliano and others like to cite this trueflation index. And it always seems to be a lot lower than the overall CPI numbers. Now, you want to ask yourself, why is that? Why is this number always so much lower? But what I like to look at, govflation, right? I mean, the government has always been somewhat incompetent when it comes to collecting data and going forward with that. But, you know, they changed the way they calculated data back in 1980, I think 3-4 time. You can see when that line really starts to spread out here. So if we were at 2.7%, you know, that back in November of 24, that was the case. Real CPI was at 10.54. Look, I'm not saying we're at that rate right now, but we have to be somewhere close to that right now. And when we see the overall, you know, numbers come in, the real return, GDP, money supply, these things are all false, right? So the key consumer price index gauge rises as the Trump trade war weighs, right? So if you look at this, consumer prices, they strip out energy and food cost because I have no idea. I mean, if you guys in the chat can tell me how you can survive without energy or food, I'd be happy to hear it. But it's insane that they do that. So inflation is starting to heat up as the effects of the tariffs. That's it, right? It's all the tariffs. It wasn't the, 40% increase in the money supply that we saw during, the cerveza sickness not too long ago, right? It couldn't possibly be that. It has to be the tariffs. So core CPI measures watches most policymakers, excludes food and energy prices, which I think is crazy. It rose 0.3% from the previous month. Then on top of that, in the past 12 months through July, core CPI rose 3.1%. Prior months was 2.9. So the data comes at a critical time. Many economists anticipate the Fed will cut interest rates in September. We're going to get to that here in a little bit, but Trump has been pressuring the Fed, right? So he would nominate EJ Antoni to lead the BLS, which coincidentally, they're also in charge of, they're also in charge of the CPI numbers. So we've got some conflicting reports here, right? They think it accelerated more than expected. Goods typically from China, such as furniture and audio, rose. Others moved up modestly. Prices are up there a little bit, right? But what is this meaning? Why are we so focused on inflation? Well, because inflation is a big driver, and the Fed is always talking about how they're going to use a data driven approach in order to determine whether or not they're going to cut interest rates. And if you're looking at the data right now, it's not clear that that should be a good time to cut interest rates right this second. I mean, if you look at all this, right? What are we seeing? We're seeing inflation still up. What is Fed's only cog to do that? Right? Fed's only lever to pull is essentially, cut this interest rate or cut interest rates, right? So seeing this increase and the largest increase since February, they're blaming tariffs, folks. Furniture, all these things, right? But hey, the cost of living isn't there. But it's really, really interesting that we're seeing, this breakdown because Trump again is demanding another emergency rate cut, and he keeps threatening a lawsuit against Powell. Too late, Powell must lower rates. The damage he has done will be by always being too late is incalculable. Trump adding, considering allowing a major lawsuit against Powell to proceed because of the horrible and grossly incompetent job he has done. I mean, the political theater is insane, right? Jerome, too late, Powell. Insane. And back in June, Jay Powell, I think I lost sound on this stream, but Powell was saying we're refusing to cut interest rates because everyone I know is forecasting meaningful increase in inflation. CPI is coming in below expectations, but does that mean that inflation is under wraps? I don't necessarily agree with that. I don't think inflation is under wraps. And, what we see with core CPI is that it's not. But it's interesting, right? I think the overall aspect of what we're seeing is some cracks are starting to come in. And some of these cracks that we are seeing have to deal with businesses, right? US businesses are showing less appetite for investment borrowing. Net of negative 30% almost for Q 2025, Q2. It's usually a weak loan, a weak appetite, and just 4.8 for stronger demand. The net of negative 28% of banks reported a stronger demand for small firms. Since 2008, such subdued credit appetite has only been seen in 2020 and after the Fed's 2023 rate hike cycle. So loan activity is absolutely deteriorating. And, well, in the next 35 days, are we going to see an interest rate cut? We're back up to 94% after this. Right? Previously, I mean, I've been coming to you guys. We've been seeing 85 yesterday, 92, 93 the day before, or a week before, excuse me. So a 94.5 or 94.4% chance of this happening seems pretty high. And with that, right, the Dixie, after the inflation numbers came out, crashing almost 0.5% down. Because we have this now, we have the issues here of everything going forward, and it hasn't been super positive. Like, we haven't really gotten inflation under wraps. So with inflation not under wraps, with the Dixie still running, let's call it under where it should be, The S&P 500 shouldn't close at an all-time high, should it? But the interesting thing is it does, right? Because the market, I think we are in somewhat of an asset bubble. We've seen one of the best runs in history when it comes to the inflation data, right? We've never seen the the S&P 500. We haven't seen a 3-month, 4-month run like this in history. So when we're seeing, business demand start to come in hot, we're starting to see all of these things and essentially all energy prices absolutely soaring. Well, it's hard to believe this true inflation number of 1.83%, to be honest. I don't think that that is accurate at all. And I think that if you really break it down, it's just hopium. I think everybody in Wall Street is really disconnected from Main Street, where I think Main Street is actively struggling with all of these things. So we've had a little quiet day in the chat, but make sure you guys are smoking that like and hitting that subscribe button to join me next time I'm going live. I'm going to keep bringing you guys some updates on all of this. And I want to hear your feedback and your questions. So please comment below, and I will catch you guys all at the next one.